Welcome back. ELPW was one of the stocks that stayed on our watch list from a few weeks back, when it made a big move from $2 to almost $5. After its run, it consolidated for a few days. Monday, we saw it halting up right after market open. Combined with the fact that it broke its high of the previous run, we knew it could do something nice. When we add its daily chart, we can see it has a gap that has never been broken so far. It came close to it twice, but didn't break it, so we would wait for the break of the gap. Once it resumed trading, it opened above the gap, so we got in. It consolidated right at our entry for a couple of minutes before it started to move up. After it came back to retest the gap once more, it made a big move for more than 60%. Interesting fact is that after its move, it came back inside the gap, but never broke the gap to the downside. This means it maybe wants to go even more. As long as it doesn't break the gap to the downside, it stays on our watch list for possible re-entries. Another gap breakout play we played this week was EZGO. This one started moving Tuesday. When we add its daily chart, we see it has a really obvious gap, from $3.18 to $2.55. Tuesday, it rejected this gap, which meant that this is indeed a strong resistance. So the breakout of this gap could be a nice entry. In after hours, it started entering the gap, but didn't break it yet. In pre-market, it finally broke it, so we got in. We didn't got as big of a move as LPW, but it was still a nice 15% nevertheless. TLIH gave us a bigger move. This one ran the 1st of May, but consolidated really nicely with low volume Monday. That means a really nice inside bar structure was being formed. Now we just needed to wait for it to break the inside bar's high. Once it did that, we got in. It made an insane move within 5 minutes and gave us a more than 40% move. Just like TLIH, we got another inside bar structure play that gave us a big move Wednesday. AIOS. This one made a really big move on the 1st of May, so we knew it had some range. When it consolidated perfectly inside its mother bar Monday, we knew it was game on. We marked the high of the inside bar candle and just waited for it to break it. Once it broke it Tuesday, we got in. It halted immediately and gave us a really easy 70% move. Do you see how these two different methods both can make you really easy money? Before we end the video, we want to show you what to do when a stock has not an inside bar structure, or when the gaps are not close to the price. ERNA began running Wednesday pre-market. When we take a look at its daily chart, we see it has a gap, but it broke it already. So that isn't an option anymore. Only if it comes back down to the gap, we could enter. But if it doesn't come down, we have to look for another entry possibility. So, when we zoom out on the daily chart, we can see it had a really strong support zone before it broke to the downside. Before it went down, it bounced 7 times from this zone. This, combined with the fact that it rejected this zone in pre-market strongly, gave us the conviction that the break of this zone could be a really nice entry level. When market opened, ERNA went down exactly to the top of the gap, so a great entry level. But we were busy with other things, so we missed it. Now all we could do is wait for the break of the big resistance zone. A few hours later, it broke the zone, so we got in, putting our stop loss right below the zone to keep our risk low. It consolidated for a bit and then gave us a 10% move. Not the biggest of moves, but keeping the fact in mind that we missed the low entry at the top of the gap, still a nice trade. For now, I hope you learned something, and I hope this video helped you further in your trading career. Keep your eyes these setups. It looks like the market is hot. See you hopefully next time. Bye.